Thursday after the close, we had a meeting with all of our traders and we said the market has changed. We had been saying that for a long period of time, but we really pounded the table even more on this idea. And what we're seeing in marketplaces, this isn't our opinion, this is just what we're seeing. What we're seeing in marketplaces is extreme weakness. We were as weak as I've seen the market be in a really long period of time at the beginning of this week. I have not seen tick be that consistently low, that consistently negative, negative 1,200, negative 1,400 into the close after we had traded down almost 8 to 10%. I have not seen that in a long period of time. And there may be a lot of people out there that are buying pull-ins. That's not working. There may be a lot of people out there playing bounces. That's not going to work most of the time. You got to really be careful about when you're actually going to get into your bounce trades. And we've been talking to the desk about being super selective on the long side and leaning short when you're actually seeing some weakness. Because for the market we're in right now, and this is the market we're in right now, the market we're in right now is bearish. The market right now that we're in, the big players are concerned about the Fed. They're concerned that the Fed is too hawkish, that they really are not concerned about stocks, that they're mostly concerned about inflation, and that inflation is going up, and they're going to do what they can to curb inflation so that doesn't get out of control. The market right now is concerned with, and this is related, the supply constraints. We saw Tesla release earnings today, which were pretty good, but they're saying we can't do as well as we want because we can't get the materials we need to build more cars. We're going to look after the close to see if Apple says anything about supply constraints in their earnings release. We're concerned right now about Russia and Ukraine. That needs to sort itself out. We're concerned about energy prices. That's a little bit related to Russia and Ukraine. We've been concerned about COVID for a little bit. That seems to be waning. But we've got all of these things that the market is overall interested in. The most important thing is inflation. The most important thing is how the Fed has signaled and will signal how it's going to cut or curb inflation, how it's going to curb the impact of inflation on the economy. And this is different than the prior years when we were in an uptrending market. The market is different. The Fed is signaling that is going to react differently. The Fed had been dovish. The Fed is now hawkish. Inflation is now a concern. It didn't used to be. And it seems as if inflation is lasting longer than we thought at the beginning. This is a central problem driving the marketplace. And all of our work, all of our patterns, all that we do here needs to start from that big picture. And it is possible tomorrow that we enter a new market and this bearish market ends. That's very unlikely. But we're going to need to see improvement on the Fed being so hawkish. We're going to need to see improvement on inflation. We're going to need to see improvement on our supply constraints. We're going to need to see improvement in Russia and Ukraine. And until we see that, right now, all we're seeing is a bearish market that wants to trade lower. Hey, go ahead and click our subscribe button so you don't miss any of the videos that we're producing for you in the trading community. And please take the time to add your feedback in the comments section for what videos you'd like for us to produce next and what you found helpful from this video. From all of us at SMB, train and trade well.